as high as 2.2 lakh crore rupees. So, that's a little bit of an update that I wanted to give, that as the stalemate continues on Vodafone Idea, Indus Stars is another one that you need to keep on your radar, because Indus Stars is one of the important important operational creditors to Vodafone Idea, and the company owes dues to Indus Stars, and Indus Stars has been on their heels to get Vodafone Idea to make that payment. But let's invite Ashish Kyal, a Wave Strategy Advisors, on the show now to talk about the market technicals. Ashish, holding on to 17,900. So at least so far, we've not breached yesterday's intraday low. Your thoughts on the day so far, and what would be the approach to trade?
Hi, morning to you and all the viewers. If you look at Nifty weekly time frame chart, it's very interesting to see that since the top was formed around 18,890 odd levels in November 2022, since then we have not even tried to break above the prior weekly candle high. And so which means that the overall trend for the market over past few months has been sell on rise, over past few weeks has been sell on rise. And that is what we can clearly see even today's session. There was an attempt to go on the upside. We opened positive. There was some attempt on the upside, but again, the selling pressure started building up. And a very important level is 17,890. If we breach that level of 17,890, then we might be headed towards that 17,756, which is again support level. So I would use pullback to sell for a target of 17,756, as long as the high of today, which is around 18,050, remains protected on Nifty.
All right. And Ashish, what would you recommend in terms of some individual trades that someone could take right now?
From individual trade perspective, I would be looking for buying Mahindra CIE Automotive, because the stock has been moving absolutely independent to the broader market. It is bucking the trend, managed to find some support around that 20 days and 10 days average, bounce back from there. The volumes are decent enough. So looks like the stock is poised for the up move. And if there is some kind of a pullback that we see in the broader market, the stock should start outperforming again. So Mahindra CIE, one can create long positions here, keeping a stop loss of 336 for the target of 372. And the next stock is on the sell side is JSW Steel. After a good run up, we can see that the 20 days average is challenged. It is broken below that. Now that is acting as a resistance level on the upside. So looks like some profit booking in JSW Steel is possible. The stock can move lower over short term, expecting a target of around 684, and one can maintain a stop loss of 762 on the upside for JSW Steel.
Right. Ashish, what about Bajaj Finance? How are charts looking there?
Bajaj Finance, we can clearly see there was a huge selling pressure that was seen yesterday after around 6-7% down. And today, again, we are seeing that pressure continuing. So I'm not too optimistic, to be very honest right now. I would rather use a pullback towards that level of 6,200 as an opportunity to re-enter on the short side. The support for the stock is placed around 5,780. So I think that is the level where someone can, looking from medium term to long term perspective, can start looking for buying and nibbling the stock. But right now, over short term, I think it is under pressure, might head towards 5,800 levels.
Okay, thank you very much for joining in. By the way, Landmark Cars is having a pretty good session. This is one of those recently listed companies. It's a retailer of cars. The issue price was 506, but when the stock listed towards the end of December, 23rd December, it had a muted listing. The stock listed at 471, but since then, from 471, we've seen the stock price climb to 565. So a near 100 rupee gain after opening below its issue price. So today as well, good gains, and it's coming in on the back of very strong volumes. So Landmark Cars is a big mover today. Get into a break. On the other side, we'll focus on some more buzzing stocks. Stay tuned.